right, welcome to Money Chat Now. I am your host, Larry Steinhouse, and today is September 28th, 2021. Oh my goodness. Ugh. Listen, don't forget, if you like the show, hit that share button. By the way, hit the share button right now. Share it on your own page so other people can watch, other people can enjoy it. Don't forget to hit the like button as well. Also, hey, don't forget to subscribe to the YouTube channel and like the Money Chat Now page on Facebook. Money Chat Now is brought to you by Investor Schooling. You can take a complimentary class this Thursday by going to investorschooling.com. You'll be able to learn about real estate investing, stock options trading, and you'll be learning from those who do it every day. On today's show, we're going to be talking about the crazy market update. Oh my goodness. How the bond market affects Wall Street and why this is happening. We're going to talk about the Wall Street Journal's continual attack on Facebook. Let's talk a little bit more about government insider trading, Warren versus Powell, and the fact that consumers will pay the tax increases. And then we'll talk about some picks that I think are going to be some great picks. All right. I warned you guys yesterday. I told you today was going to be a bad day. And why did I think today was going to be a bad day? Because the bond yield market was over 1.5% yesterday, and it spooks investors. At one point, the Dow was down over 600 points, and the S&P was down almost 100 points at one point. The big loser, however, was the NASDAQ. The NASDAQ, unbelievable. It closed down over 400 points, over 423 points. This is really bad. I mean, look, think about it. That's almost 3%. The Dow is currently at about 34,500, so 600 points isn't so bad, but the NASDAQ is about 14,000 points, between 14 and 15,000 points, and 400 points is horrible. That's a nightmare and scary, and if you were in some tech stocks today, you got hurt pretty bad. All right, let's talk a little bit about the bond market and how this all works. Many of my viewers and students ask why and how the bond market affects the stocks or the stock market, so let me try to explain. Many good stocks pay dividends as you hold them. So if you're a money market, if you're a market maker, you're holding stocks and they're paying dividends, and that's going into the accounts of your clients or even your own stock, your own account if you have those stocks, right? And dividends is basically like interest you would get in the bank if you put your money there. So in other words, if you had a bank account, you put $100,000 in it, you got 1% interest. That would be like a dividend. It would be 1% interest, right? Basically, some relatively safe stocks pay anywhere from 0.5% of a dividend to 2% dividend. So it's almost like getting 0.5% to 2% on your money every year after year after year, almost guaranteed. There are also some stocks that give higher dividends. However, those stocks might be risky. So let's talk about what happens. Money managers who want to keep their clients' money safe will move over to bonds paying the same basic interest rate that these stocks paid, but with lower risk. So they'll put it in bonds. The bond price won't move up or down very much, but the dividend will be the same. You know, they'll be making not a dividend, but they're making the interest on the bond, which will be about 1.5%, which is where it's going right now. And when you consider that the Fed is going to ease the monetary stimulus package, the money managers also feel that the bond rate will actually go up higher. And this is why when bond rates go up, the stock market goes down, because people are moving their money from stocks to bonds. I'm going to also tell you, just in case you're worried, stop worrying, because this is a temporary issue. Like myself, most money managers like the action of the stock market, and they will quickly move back into stocks. We may even have the bond rates moving up slowly again, but even if it doesn't fall back, the money managers can't help but play the stock market. And that's what they do best. They play the stock market, they buy and sell stocks, they trade stocks. This is what they do. This is what they're always going to do. This is why the stock market moves up and down the way it is. This is why stocks don't stay at one price. It's all because the money managers are, a bunch of addicts. And they want to make money on the stock market, and they want to make their money, and they want to make your money. And if you've ever heard my theory about steak and tuna, which I can't get into right now, you understand that it's all about the steak that they're going to get at the end of the week. All right, we also have earnings season coming up, so the market will naturally move up. The bottom line, this today was a buying opportunity, and I hope you took advantage of it. I will tell you that it's a possibility tomorrow will start out bad. Maybe a 200-point drop, maybe a 300-point drop, but it'll quickly recover if history repeats itself, which often does in the stock market. So because I actually expected the market to move up this afternoon, it didn't. It actually moved back down, which makes me believe that tomorrow will open down and things will get better during the day, and it may not finish positive, but it's not going to be that horrible. And then by Thursday and Friday, you're going to forget today. That's really my take on it. Take a look. We'll see what happens. Let's talk a little bit about the Wall Street Journal's continual attack on Facebook in their special edition, The Facebook Files. Facebook is coming under continuing fire in recent days for its effect on young users and its efforts to create products for them. Inside the company, teams of employees have for years been laying out plans to attract preteens that go beyond what is publicly known. This is allegedly spurred by fear that Facebook could lose a new generation of users critical to its future. Over the past 5 years, Facebook has made what's called big bets on designing products that would appeal to preteens across its services, according to a document from earlier this year. Are they fearful that apps like Snap, TikTok, and others will lure teenagers and Facebook will no longer have a user base? Sadly, Facebook should really start focusing on their current user base and how to save that. I have personally found my ability to post what's on my mind, as Facebook asks, impossible. I've been a victim of Facebook censorship several times and had my account access denied in what many refer to as Facebook jail. Get over it, Facebook. You're alienating your current user base, and if you think you can replace them with vulnerable children, you will be mistaken. All right, as for Facebook stock, I can say all that, and I can still tell you that Facebook stock is a play. I want to thank you, Wall Street Journal. You're making it easier for me to take my profits or take candy from a baby. Facebook stock keeps moving up and down in great patterns as your articles bash them. I've often said this before, fake news started in the financial sector, and the Wall Street Journal is perfect proof that they are trying to push down the price of a great profit. They're trying to push down the stock and make great profits in the next 4 weeks. My prediction, Facebook hits at least 375 in November and probably 400 early next year. All right, let's take a quick break and we will be right back. Investor Schooling needs a new slogan.
Investor Schooling? Never heard of.
Investor Schooling?
Never heard of.
Investor Schooling? Never heard of them.
Any suggestions? Phil?
Investor Schooling. We never heard of you either.
Investor Schooling. We never heard of you either. Register for a free class at investorschooling.com.
Investor Schooling. Those guys are everywhere.
Investor Schooling? Those guys are everywhere.
Investor Schooling?
Those guys are everywhere.
Investor Schooling. Those guys are everywhere. Register for a free class at investorschooling.com.
Welcome back to Money Chat Now. I'm your host, Larry Steinhouse, and so far we've been just talking about this terrible market today. It was bad. Wow. The NASDAQ, I could never have predicted it to be down almost 3%. That's really, really bad. But hopefully we're going to make a return. Also, of course, how the bond market affected that and why it happens and how it happens. We've also been talking about the Wall Street Journal's continual attack on Facebook. And let's talk a little bit about insider trading. Wow. I'm sorry, it just amazes me, right? According to the Wall Street Journal, more than 130 federal judges have violated U.S. law and judicial ethics by overseeing court cases involving companies which they or their family own stock. Whoa. A Wall Street Journal investigation found that judges have improperly failed to disqualify themselves from 685 court cases around the nation since 2010. The jurists were appointed by nearly every president from Lyndon Johnson to Donald Trump. So all these judges are basically they're making decisions based on their own pocket, not based on the law. Alerted to the violations by the Journal, 56 of the judges have directed court clerks to notify parties in 329 lawsuits that they should recuse themselves. That means new judges might be assigned potentially upending rulings. So now the judges have already started on these cases, and now they're saying, oh, we can't do this anymore because we got caught. Oh my, unbelievable. When judges participate in such cases, about 2/3 of their rulings on motions that were contested came down in favor of their or their family's financial interest. Even more insider trading is going on with the federal bank presidents. It continues to amaze me that all these insider traders are allowed and were allowed to own stocks, bonds, and other investment vehicles while making the policy that affects those assets. Imagine you're the Fed president and you know that bond yields are going to rise because you're making a policy that causes it. Now you decide to sell all your tech stocks short or buy puts right before the announcement yesterday. This is called insider trading. Apparently the judges, Fed bank presidents, and members of Congress are immune to being punished for insider trading. Look, I think Martha Stewart should go there and say, hey, why was I put in jail if you guys aren't being put in jail? Amazing, right? A headline today also reads that Dallas Fed President Kaplan to retire early on October 8th, citing trading disclosure distraction. This guy's been insider trading for so long that the threat of having be held accountable in the future is making him retire next week. Who do you think his friends are? They obviously are heads of other Fed banks who will be feeding him the information, and now he can use this information to trade stocks and bonds without any consequences. These guys are definitely a piece of work. Then there's, of course, Boston Fed President Eric Rosengren, who had come under similar scrutiny, announced earlier in the day that he was going to retire as well. The world of money definitely works different for these guys. And I'm going to tell you, I'm going to suggest you watch this show and learn more about how you could predict the moves of these unethical players. And when you learn this, you're going to become rich as well. No doubt about it. So start learning, start paying attention to Money Chat Now, start paying attention to me, start paying attention to all the things you can learn. And I'm going to tell you right now, I have a book coming out. It's called Money Hacks. And in this book, I talk about all the different ways that you too can make money like the rich and not pay taxes. All right, let's get on to the next topic real quick. And let's talk a little bit about Warren versus Powell. So nothing fascinates me more than a politician who knows nothing about finances ripping into an expert in finances about policies the politicians know nothing about. So Pocahontas herself, Elizabeth Warren, told Fed Chairman Powell that she will fight against his re-election. She's claiming that Powell has watered down banking policies that were put in to protect the consumer against another possible 2008 banking crisis. In 2008, we all know that the banks were accused of making predatory loans for people who couldn't clearly show that they could pay them back. When it was found that the borrowers couldn't pay them back, it led to a complete tumble of the world of financial system. Because of the fear of this happening again, politicians changed the rules and laws that were designed to prevent this from happening. The reality was that it was very difficult for people to get loans for houses and businesses, and as time went by, the Fed changed some of those restricting laws, and mortgages are now easier to get. They are definitely not as easy to get as they were in 2004 and 2006, when all you had to do was fog a mirror to qualify. Because the Cherokee mom is now trying to take charge, Warren is saying to Powell, you're going to be the cause of the next crisis by making it easier for first-time homeowners or someone who is living paycheck to paycheck to buy a home. It must be nice to not understand that the average person needs to get breaks now and then to make their life easier. Warren is trying to take away these breaks from the very people she claims to be helping. Your record gives me grave concerns. Over and over, you have acted to make our banking system less safe, and that makes you a dangerous man to head up the Fed, and that's why I will oppose your renomination, Warren said. Powell's reaction? He basically ignored her, which, by the way, is probably the best thing for everyone on the planet to do. Biden plans to nominate Powell for the position again, so clearly he doesn't care. Some Democrats want more diversity in the position. Either way, I don't care, and neither should you. the market downturn is coming no matter who's in charge. In fact, if they replace Powell, then Powell can not even take the blame. All right, let's talk a little bit about, let's do this. Let's take a quick break, and then we'll come back and we'll talk about how the fact that consumers are going to pay the tax increases. We'll see you in about a minute.
So you've thought about investing in real estate, houses, apartment buildings, properties, but don't really know where to start? Well, what if you could very easily learn how to gain strategies to use other people's money to buy and sell houses in the Philadelphia area? If you could learn and network with successful area real estate investors and how to produce monthly income on rental properties without headaches, that place is Investor Schooling. With Investor Schooling, you'll learn from two Philadelphia area rockstar real estate investors, Phil Falcone and Larry Steinhouse, about how to buy and sell properties the easy way and teach you basic and advanced techniques to help you make money in real estate. You can attend Investor Schooling in person or online visual classes 8 times a month. You can and will learn how to make money in real estate. Call for free information and get a complimentary pass to one of these classes. But don't delay, as these complimentary passes are limited. Call the number on your screen now or visit investorschooling.com. investorschooling.com.
Welcome back to Money Chat Now. I am your host, Larry Steinhouse, and we've been talking about the market update. What a terrible day. The Dow is down 570 points. The S&P finished down only 90. It was down over 100 at one point. And the NASDAQ, the NASDAQ is down over 423 points. That's a scary number, really scary number. We also talked about how the bond market, the bond yield was up to 1.5%, actually popped over 1.5%, and that's what caused the stock market to tank today. And then, of course, we also talked about the fact that the Wall Street Journal is continuing to attack Facebook, and Facebook needs to learn how to treat people better. And we also talked about government insider trading. Now let's talk a little bit about the fact that consumers pay tax increases. You know, I'm going to ask you a question. Did you know that the large corporations, if large corporations pay more in taxes, they will pass that tax increase to the consumer? Did you also know that if large corporations pay more taxes and make less money, they will hire less people? Apparently, liberal Democrats are unaware of this phenomenon. The Business Roundtable, a large and powerful group consisting of prominent corporate leaders, said Tuesday that Democrats' proposed corporate tax hike is one of the greatest threats to companies' investment, hiring, and growth plans in the foreseeable future. That's right. Did you know that if you raise taxes and corporations make less money, they will pass on they will try to pass it on to the consumer, so they'll try to make more money from the consumer, they'll charge more. They also can hire less people because in the end, I don't care whether you agree with it or disagree with it, the stockholder is the most important person to the people in corporations. That means if you raise taxes, they're going to raise their prices and they're not going to hire as many people in order to make their stock look better. Until we're living in communist China, this is the way the reality is. So if you're going to raise taxes, please understand you're going to kill the economy. But then again, that's what these guys want to do anyway. They want to kill the economy because that's what they're best at. If they kill the economy, then they can control people by how much money they give them. You guys know that. We know that. That's how communism works. And that's basically how the world's going to work pretty soon. By the way, I've mentioned this before. I have a new book coming out. My new book is called Money Hacks. And in this book, I actually tell you that everything you think you know about money is probably wrong. All right, let's all talk about this. Let's talk a little bit about what stocks I think is great and what we should be playing. All right, so like I've said before, the stock market took a tumble today. And I'm going to tell you right now, buy the dips. Buy the dips, absolutely buy the dips. Some of the great dips today were Facebook, Apple, Robinhood, BA. Have you been watching this week? If you were watching this week and last week, you would have got some great tips, and you certainly would have made some money based on everything that I've been giving to you. Listen, I also mentioned that the energy stocks are still rocking the house. If you can get some of the energy stocks to drop a little bit, jump in, watch for the infrastructure play over the next few days, and then watch for the stocks to drop on Friday if the bill gets passed. I want to thank you again for watching Money Chat Now. Don't forget to hit that share button. Don't forget to tell everybody about the show. Hit the like button. Subscribe to the YouTube channel, and of course, like the Money Chat Now page on Facebook. We will see you tomorrow, and hopefully I'm right and the stock market will bounce back. Don't forget, from time to time, I own some of the assets and options discussed in this show. The opinions discussed in this show are solely mine, and no one has asked me to discuss them. And we will see you tomorrow. Take care.